You file a claim with your insurance company expecting help. Instead, you're told your injury isn't covered, your repairs are too expensive, or you need to wait another 6 weeks for a decision. What if I told you this isn't bad luck, it's a system designed to make you give up? In this video, I'm going to show you 5 psychological tactics insurance companies use to reduce payouts, and exactly how to counter each one. These aren't conspiracy theories. They're documented practices drawn from industry training manuals, regulatory investigations, and Jay Feinman's book Delay, Deny, Defend, Disclaimer. This is educational content, not legal or financial advice. If you're in a dispute with your insurer, consult a qualified professional. Now let's get into it. Before we dive into the tactics, you need to understand one thing. The claims process you're dealing with today is not the same one from 20 years ago. Starting in the 1990s, major insurers hired consulting firms, most notably McKinsey & Company, to redesign how claims were handled. The goal wasn't just efficiency. It was to turn the claims department into a profit center. Point 1 McKinsey's slide put it bluntly. We will win the economics game. Winning will be a zero-sum game. In other words, every dollar not paid to you is a dollar kept by the company. This redesign introduced computer systems, performance metrics for adjusters, and standardized tactics to minimize payouts. And the result? Thousands of claims delayed, denied, or settled for less than $0 when your adjuster seems unhelpful or your claim stalls. It's not personal, it's the system. Let's break down how it works. Tactic number 1. Authority bias and the trusted expert trap. Authority bias is our tendency to trust people who seem like experts, even when their interests conflict with ours. Insurers exploit this by positioning adjusters, engineers, and medical reviewers as neutral authorities, when in reality they work for the company paying the claim. We assume the company doctor or the independent engineer is objective. But studies show that experts who are repeatedly hired by one side tend to produce findings favorable to that side, consciously or not. Here's how it shows up. Independent medical exams, or IMES. You are sent to a doctor chosen by the insurer. That doctor examines you for 8 minutes and concludes your injury isn't serious. The insurer uses this to deny or reduce your claim. Engineering reports. After a house fire or hurricane, an engineer hired by the insurer determines most damage was caused by flooding, not wind. Conveniently, flood damage isn't covered. Paper reviews. A utilization reviewer reads your medical records and decides your treatment was unnecessary, without ever meeting you. In one Idaho case, State Farm used a review service called Medical Claims Review Service, which issued cookie-cutter reports denying claims without physician oversight. A judge called the operation completely bogus. So how do you counter this? First, get your own expert. Don't rely solely on the insurer's doctor or engineer. Hire your own, or ask your doctor to provide a detailed rebuttal. Second, ask about conflicts. When scheduled for an IME, ask, how often does this doctor examine claimants for this insurer? What percentage of those exams result in denial? Document the answer. Third, request full reports. Get copies of all expert reports. Look for vague conclusions, missing tests, or contradictions with your treating physician's findings. Fourth, challenge bias in writing. If an expert's opinion seems predetermined, write to your insurer. I note that this doctor has been retained by your company in 200+ cases. Please explain how this arrangement preserves objectivity. Fifth, file a regulatory complaint. If the expert's conduct seems unethical, report it to your state insurance department or medical board. Point 2 common pitfalls to avoid. Don't skip the IME. Insurers can deny your claim for non-cooperation. Attend, but bring a witness and take notes. And don't assume independent means neutral. Always verify who's paying the expert. Tactic number 2, friction engineering, or making you give up. Friction engineering means adding steps, delays, and bureaucratic hurdles to the claims process until you're too exhausted to continue. The goal is to make pursuing your claim more painful than accepting a lowball offer. Behavioral economists call this present bias. We prefer immediate relief over future reward, even if the future reward is larger. Insurers exploit this by making now miserable and later uncertain. Here's how it shows up. Endless document requests. You submit proof of loss. The adjuster asks for more. Then a notarized statement. Then 5 years of tax returns, even for a minor claim. Exam under oath. You're required to testify, under oath, to an insurer's lawyer, sometimes multiple times. Miss one question and your claim is denied for non-cooperation. Delayed inspections. The adjuster doesn't visit your damaged home for weeks. Meanwhile, mold grows and secondary damage worsens. Changing adjusters. Just as you build rapport, Your case is transferred. The new adjuster asks for documents you already provided. In one Kentucky case, a homeowner submitted 3 proof of loss statements, receipts, repair estimates, tax returns, and gave testimony 4 separate times, and the insurer still didn't pay. How do you counter this? First, build a claim file. Keep copies of every document, photo, email, and note from phone calls. Use a binder or cloud folder labeled by date. Second, send cover letters. When submitting documents, write, enclosed, list of items. This is my second or third submission. Please confirm receipt and advise if anything further is required within 10 business days. Third, set deadlines. In writing, request a response by a specific date. Please provide a coverage decision by this date. If you require additional information, specify what is needed by an earlier date. Fourth, escalate vertically. If the adjuster stalls, email their supervisor. Copy in your state insurance department's complaint email if necessary. Fifth, document time spent. Track hours spent on the claim. In some jurisdictions, unreasonable delays can result in penalties or attorney fee awards. Point 2 pitfalls. Don't let gaps grow. If you stop responding, the insurer can close the claim for abandonment. And don't provide irrelevant info. If a request seems excessive, like tax returns for a fender bender, politely ask, how is this relevant to coverage under the policy? Tactic number 3, lowball anchoring. Anchoring is a cognitive bias where the first number we hear becomes the reference point for negotiation, even if it's absurdly low. Insurers use this by making an initial offer far below fair value, hoping you'll negotiate up to something still too low, but which feels like a win. Research shows that even when people know an anchor is arbitrary, it still influences their judgment. By starting low, the insurer shifts the entire negotiation range downward. Here's how it shows up. Colossus and Xactimate. These are software systems that spit out claim valuations. Adjusters are often evaluated on how closely they settle to the software's number, which is tuned by the insurer to produce low figures. Take it or litigate. The adjuster says, our final offer is $3,000. If you want more, you'll have to sue. For a claim worth $10,000, most people accept the $3,000 rather than face legal costs. MIST offers. In minor impact soft tissue cases, the initial offer may be less than your medical bills, sometimes just a few $100s. In one Arizona case, an Allstate policyholder with $4,400 in medical bills and lost wages was offered exactly that amount, nothing for pain and suffering. An arbitrator later awarded $9,500. How do you counter this? First, ignore the first offer. Treat it as a data point, not a ceiling. Respond, thank you for the offer. I will review and respond within X days. Second, build your own valuation. Use online claim calculators, quotes from 3 contractors, or settlements in similar cases to establish an independent anchor. Third, counter high. If the insurer offers $5,000, don't counter at $6,000. Counter at $12,000 with documentation. Let them negotiate up toward fair value. Fourth, expose the software. Ask in writing, was this valuation generated by Colossus or similar software? Please provide the inputs, severity points, and tuning parameters used. Fifth, get competing estimates. For property damage, obtain estimates from reputable local contractors. If they're 30 to 50% higher than the insurer's Xactimate figure, attach them to your response. Point 2 pitfalls. Don't accept out of desperation. If you need money now, consider a partial payment while you negotiate the rest. And don't negotiate against yourself. If the insurer says, what do you think is fair? Respond, I believe the policy entitles me to this amount, as detailed in my submission. Tactic number 4, strategic silence and delay. Strategic silence means withholding decisions, ignoring calls, or simply waiting, because time is on the insurer's side. The longer you wait, the more desperate you become, and the more the insurer profits from investing your claim dollars. This exploits loss aversion. The pain of losing something, your home, your car, your health, is stronger than the pleasure of eventual gain. Delay turns financial pressure into psychological pressure. Here's how it shows up. No response for weeks. You leave voicemails, send emails, crickets. Then suddenly, your claim is denied, with no prior warning, waiting on reports. The adjuster says, we are waiting for the engineer's report, but never tells you when it will arrive or shares it when it does. Investment float. Every day the insurer holds your money, they earn interest. One estimate. Delaying payment by 30 days across millions of claims generates tens of millions in investment income. In one auto injury case, State Farm's adjuster waited 4 months for a doctor's report he knew didn't exist. then concluded the injury wasn't serious without sufficient evidence. How do you counter this? First, set communication deadlines. I expect a response by this date. If I don't hear from you, I will escalate to supervisor or state regulator. Second, send certified letters. For major requests like coverage decision or payment authorization, send via certified mail with return receipt. This creates a paper trail. Third, invoke state law. Many states require insurers to acknowledge claims within 15 to 30 days and make decisions within 30 to 60 days. Reference these laws in your letter. Fourth, file a complaint. If delay exceeds statutory timelines, file with your state insurance department. Complaints trigger regulatory scrutiny. Fifth, demand interest. In many jurisdictions, unreasonable delay entitles you to interest on the claim amount from the date it should have been paid. Point 2 pitfalls. Don't wait passively. If you haven't heard back in 10 days, follow up. And don't assume silence means denial. It may just be a tactic to test your resolve. Tactic number 5, segmentation. You're a category, not a person. Segmentation means sorting claims into categories and treating each category differently, regardless of the individual facts. The goal is efficiency for the insurer, not fairness for you. This exploits representativeness heuristic. We judge cases by how typical they seem, not by their unique details. If your claim fits a problem category, you're treated as a problem. Here's how it shows up. MIST bucket. If your claim involves a low-speed crash and soft tissue injury, it's flagged as MIST, minor impact soft tissue. The adjuster is trained to offer little or nothing because the insurer assumes you're exaggerating. Fraud flags. A point system scores your claim for fraud risk. Unemployed, +4 points. Hard to reach, +4. Rear end accident, +5. Hit 10 points and your claim goes to the Special Investigations Unit, where it's treated as criminal until proven innocent. Represented versus unrepresented. If you don't have a lawyer, your claim is handled one way. If you hire a lawyer, the file moves to defense of litigated files, where the insurer's goal is to outspend you. McKinsey's training materials for Allstate stated, focus on reducing the need for attorney representation. The way we approach claimants will significantly alter representation rates and contribute to lower severities. How do you counter this? First, know the categories. If you suspect your claim has been bucketed, like MIST or fraud, ask directly, has this claim been categorized under any internal program? If so, which one and why? Second, provide context. If a red flag is triggered, like you were unemployed at the time, explain proactively. I was unemployed due to layoff or injury, not financial distress. Here is documentation. Third, hire a lawyer strategically. For high-value claims, hiring a lawyer early can signal you won't be pushed around. For low-value claims, exhaust internal escalation first. Fourth, demand individual review. Right, I request that this claim be evaluated on its specific facts, not assigned to a category or processed via automated valuation. Fifth, challenge software. If Colossus, Xactimate, or similar systems are used, demand transparency. What inputs were used? What is the error rate? Has the system been independently audited? 2 pitfalls. Don't fit the stereotype. If you're angry on the phone, you may be flagged as difficult, which can trigger more scrutiny. And don't accept generic explanations. Our system says X is not a valid reason to deny a claim. Let's recap the 5 tactics. Number 1, authority bias. The independent expert who's really on the insurer's payroll. Number 2, friction engineering. Bureaucratic hurdles designed to exhaust you. Number 3, lowball anchoring. Starting negotiations with an unfairly low number. Number 4, strategic silence. Delaying decisions to increase financial and emotional pressure. Number 5, segmentation. Treating your claim as a category, not a unique case. These tactics work because most people don't know they exist. But now you do. The goal isn't to make you paranoid, it's to make you prepared. When you recognize a tactic, you can counter it. Document everything. Escalate when necessary. Challenge software and biased experts. And remember, the insurance company is not your friend, but they're not your enemy either. They are business, and you're a customer asserting your contractual rights. If you're in over your head, consult a public adjuster or attorney who specializes in insurance disputes. Many offer free consultations, and in bad faith cases, they can recover their fees from the insurer. If this was helpful, hit subscribe. I break down complex systems so you can navigate them with confidence.